Aloha and welcome to Java. Thank you for joining me again this morning. This is for Tuesday, May 21st, 2024. So today, mostly all about Fed speakers, watching the bonds and the debt market as well as the regular market. Let's go right into it. So we were watching the MMRI as our favorite risk indicator, rising slowly, however, rising in risk. We've also got the fear greed index still in the greed territory. So with this, we've got the 10-year yield and relative strength of the dollar. These both gained ground yesterday, and that put a bit of pressure on stocks towards the end of the day. So where we're sitting at the moment is mixed. And with this sentiment, right now we've got oil down because this is of all of the things going on in the Middle East for the most part. So commodities, precious metals and Bitcoin on pullbacks are my favorite ones. And big money is moving. Big money is moving into commodities, moving into gold, central banks purchasing gold, silver. So just want to kind of let you know that. We've got United States bonds on track for the worst performance in over 100 years. So no buyers trying to sell the debt, but there's no buyers. So what do they have to do to make buyers want to purchase them? The yields or the interest that they pay goes up. So as that yield goes up, it incentivizes people to purchase the bonds so that they get a return on it. And the as yields go up, the price is dropping because people don't want to purchase the bonds. So with this, we've got the futures are in the red. So we're going to have a mixed day, I think. We'll see when the market opens. We have to trade what it gives us. So calendar and earnings, as I was saying, for the most part, we've got Fed speakers. Really looking forward to the FOMC minutes tomorrow. So what this all boils down to now, what the market is looking for. They don't really care about the numbers anymore. It's all about what the Federal Reserve is going to do regarding rate cuts. How many and how soon? And anything that could affect that is what they're looking for. So this whole market is not guided at all by valuations. It's completely what they may do and the easy money. So as far as earnings, we've got the spotlight today. It's going to be Lowe's, and we'll watch that for home improvement. AutoZone, car repairs, as we were speaking about, Toll Brothers, Xpeng, and Macy's. So we've also got Target is prior to the market open tomorrow, so just be ready for those. So something I'm watching, and it's relatively quiet in the background. This is direct from the page of the SEC. So Security Exchange Commission finalized their rules to reduce risks in clearance and settlements. What they're doing is requiring that they settle a trade in 1 day, within a day, instead of in 2. But when they push this, there's a lot more failed settlements and errors that occur. So the compliance date for the final rule is May 28th. That's coming up rapidly. And what is going to happen is the last time they trialed this, they've done it on a smaller scale, but it increased the number of failed trade settlements significantly. So if that happens again, it could cause some serious headwinds. Not only that, but that is within 3 days of major rebalancing of the market. So the indices must rebalance as required with their basically with what they're required to put forth for the investors. And that's going to be a real test. So that's what they're talking about. So another news is the recession here. United States delinquency rate surges to the highest level in 14 years. This actually, while it's true with the US delinquency rate with the debt, they're more speaking about consumers, United States consumers, basically. So we've got this, what if all currency became worthless? A thought on how people would move off the trade with this. Because we've also got the United States has its debt that it's paying. The debt service on all of the money, the interest rate alone is absolutely ridiculous. But the plan is to inflate it away. So they're moving into long-term 30-year bonds now that the yields are increased. So they're getting more back on those yields for where the money basically is parked. And then as that money basically becomes worthless, then the loans and the debt service will also diminish. So that could be a larger part of that other plan. So with this, we've got a few stories on China. They are offloading record amount of dollar assets, basically moving away from dollar trades. They sold over $53 billion US securities. So again, they used to be a major purchaser. Now they're dumping them. They've got some issues with their homes. Their home price is falling by the largest amount in history, and they've got the government purchasing their single family homes still in trouble. Now, with all of the tariffs that the US administration had put on them, they're basically firing back in this story about an investigation into plastic imports. So the United States, with the plastic is absolutely ridiculous. So with this, I wanted to bring this up with Microsoft, because if you haven't noticed on your system and you run Microsoft, they've rolled out updates. These include their artificial intelligence co-pilot, whether you like it or not. And if you don't want them in with everything, you have to opt out. So it's on by default and you have to shut it off. So the story is about they're kind of quote calling it Black Mirror recall feature records everything you do. So it's the artificial intelligence co-pilot. Basically, they're stealing your information for free to train their artificial intelligence. It's basically recording everything on your screen, all of your interactions, and then running it through Copilot unless you go in and shut it off. So I have segregated systems, meaning this one in particular that I'm using, it's on the web and it's open. I use Microsoft on this one. I have to key everything down to it. And it's basically my open, if you will, target. I've got my other separated systems. So, question. This came out from Gallup. It was basically a poll they did for what you think is following best long-term investment. And this is showing in order what they think is real estate, which I still agree with at the moment, depending on location. Stocks and mutual funds, I disagree with that being above gold. Gold is the third. Savings accounts and CDs are losing money. Bonds and cryptocurrency. So it just shows what the general person thinks. But if you park your money in a savings account, inflation is going to eat that away in no time. So we've also got real estate. The reason I favor that is because it is still, at this moment, the most tax-friendly investment you can have. There's still issues. You've got rising property taxes, and you're going to have rising insurance. So it's got some serious headwinds as well. And that's why I say it's going to be very location specific. And you have to look at the numbers, but there's deals in all of these if you look and you search enough. So with this, I want to go into our garden farm. This one is dill. It's not just for pickles, although pickles are wonderful, especially if you have real pickles that have been pickled and are still what we call alive, because that has a lot of the, like yogurt has a lot of the good probiotics for your body. So it helps with a lot of good things, can calm hiccups. Anyway, I thought that was an interesting thing. It's got a lot of nutrition in it. Vitamin A, you don't eat a lot of it, but it's got flavonoids, an excellent source of vitamin C. So it's a good kind of hedge against cancer, if you will, kind of bolsters your immune system. And it can also manage diabetes. So pretty good thing to grow, really easy, really tasty herb if you like. It goes very well with seafood. And with that, I wish you all a wonderful trading day, wonderful day in general. And until I see you again, my friends, stay free.